Hi, thanks so much for tuning in. You're watching BQ Prime. This is the Mutual Fund Show, and my name is Alex Matthew. This conversation is set up to talk about passive investing and specifically with regard to equity. Now, it's only been a few years that we've seen the growth of passive investing in India with regard to mutual funds, and it's already grown in a very big way. Part of that has to do with the fund flows from the pension fund into passive, but there's also a lot of adoption from investors like yourself. We're going to talk about how far that has come. And then the second leg of the conversation, we'll talk about how you can incorporate the various products that are currently available and how they can fit the requirements that you have. The first leg of the conversation has to do with what the industry has done over the past few years and what the implications of that are. Joining me to talk about that is Pratik Oswal, who is the head of passive funds at Motilal Oswal. Pratik, thanks so much for taking the time. Um, let's start with this, right? Because I remember very distinctly, we spoke just about 3.5, 4 years back. We did a podcast that spoke about passive as this new opportunity for investors to get into, and it's come quite a while, quite a distance from that point. How would you describe that journey so far, and where do we stand right now?
Yeah, hi Alex. Thanks for having me here. Um, yeah, so I actually do remember a conversation that we had 3.5 years ago, and I think we're still somewhat in the same phase where I think one of the things that we as an AMC and also a lot of other sort of mutual fund houses are still talking about awareness. I think even though we've seen a lot of funds flown to passive funds over the last 5 to 7 years' time. To give some numbers, the overall AUM of passive funds were about 20,000 crore in 2015 or 2016, and that's grown to almost 7.6 lakh crore, which is now approximately 17 to 18% of the overall mutual fund AUM from about 1.5 2%. So not only has it grown in size, it's also grown in market share. Um, and I think not only when people think about passive funds, they think about Nifty, Sensex, but we've seen creation of new categories in this era of the last 5 years. You did not have fixed income passive funds 5 years ago. That's a 1 lakh crore industry today. You did not see much of commodities. You have gold and silver ETFs. You did not see international funds 5 years ago. Now that's about 60, 70,000 crore in assets. So I think what you see in the industry is an explosion in a number of categories, number of funds, and also in terms of the number of AUM that has come into the passive funds over the last 5 years. However, having said that, most of the AUM that is coming in through family offices, mostly institutional, so from pension funds. But increasingly over the last couple of years, you are seeing a lot more interest coming in from investors from all sides. I think awareness is still the barrier, but I do think that over time, we've seen less and less of that problem.
One of the reasons why I wanted to have this conversation with you is that you guys did an interesting study not too long back where you asked a sample of investors what their approach to investing is, and that threw up a few very interesting results. So, what can you tell us about the headline from that? One, more people are obviously aware of passive, but why do they get into it? To what extent do they get into it, and what products do they choose?
Yeah. So we actually, did this very interesting survey, and we keep on doing surveys to, understand investor preferences and how they sort of change over time. We obviously, want to be more customer centric. And what's really interesting is that, we did this survey, towards the start of the year, which we ran for about 4 months. We had about 3 to 4 thousand responses in that survey. And what is interesting is that, and these are targeted towards mutual fund investors, not only from our AMC, but from across the industry. And what we saw was there is a lot more the awareness, which was lacking. When we had the podcast 3 years ago, is currently not is a lot more than it used to be. So approximately 60% plus of the participants said that they've invested in at least one passive fund, and most of them are looking at increasing their allocation towards passive funds going forward. Not only that, there are obviously categories like factor funds where people are now slowly being aware of, and also most people in this segment are looking to increase their allocation towards passive funds over the next 12 months. So I think the good thing is that majority of the investor base, at least investor base that we surveyed, and also overall from the end investor's point of view, passive funds are sort of making the cut today from a retail perspective, and people are looking at it from a much stronger lens. I think what has driven demand towards passive funds, from the investor's perspective, there are three main reasons to I think what investors have said. So in the survey, the number one is low cost. I think passive funds are popular because more of your money is invested in the underlying funds because the expense ratio tends to be much lower. So low cost is the number one reason. And apart from that, also simplicity and market returns is something which is also equally almost as important as low cost. So I think what we've seen in passive funds, and we have a host of passive funds today. There are about 170, 180 index funds, ETFs launched. But what we've seen is that the simpler products are getting most of the AUMs. So I think simplicity and also low cost is one of the main reasons to why we're seeing so much interest in index funds, ETFs, at least over the last.
I think you also asked about the ideal time frame that people intend to hold these for. I'm curious about the responses that you got there.
Yeah, exactly. So what's and this is actually a very important thing because usually a lot of people tend to have trading strategies when they're buying Bank Nifty or selling Nifty. But I think in our survey, what was really sort of the good stuff is that most of our respondents were actually looking at from a 3-year plus perspective. So I think a lot of people are looking at passive funds not from a trading mindset but from an investing mindset, which I think is an excellent choice. And also number two is 3 out of 4 respondents were actually looking at playing this space via SIPs, which again is great because SIPs are great for long-term wealth creation. You don't have to worry about time in the markets and all of that. So I think the combination of the fact that most people are looking at it from an investing lens, plus that people are looking at it from an SIP lens is actually a great way. It's quite encouraging the way people are using passive funds.
My final point to you, or my question to you, is about the products that are currently available and that are in the works. Some of your peers or some of your soon-to-be peers intend to be primarily passive oriented. So that would entail, I think, a lot more products in this space. And you mentioned at the start that people gravitate to a few funds or fund types because of the simplicity of it. But there's a lot more that you can get in terms of nuance. And if you look at, say, the US, where you see more than 50% of investments or AUM in passive, there are a lot of strategies that are available that are not currently in play here. What current strategies do you think are interesting to talk about?
Yeah, looking at the US, we also feel that simpler products will get majority of the AUM. If you think about an index fund, the first thing that comes to most people's minds is the S&P 500 fund, which is very popular in the US. I think 3 out of 4 of the largest funds in the world are S&P 500 index funds. So that's how popular that fund is. And I think even though obviously majority of the AUM is there, just the size of the market is big enough so that there are many other billion-dollar plus funds in the marketplace. So I think the way I think most AMCs, including ours, looks at passive funds is number one is building blocks for asset allocation, and second is categories. I think most people think of index funds, ETFs as Sensex and Nifty, but actually you can have unlimited amount of passive funds. Most of these big AMCs in the US have hundreds of index fund ETFs under their umbrella, and we'll probably see similar sort of trends coming in India over the next 5 to 10 years time. I also agree that the whole idea about passive is to be simple, but we've as an industry we tend to overcomplicate a lot of things. So there's a lot of factor funds and mid cap funds, small cap funds, and multi cap funds and micro cap funds. So I think in terms of choice, there is a lot more choice than it was 5 years ago. And as an investor, I think the idea is that you're catering to different types of investors. You're catering to a sophisticated investor, a retail investor, someone who's looking for a different type of risk profile. So I think because we're catering to a varied sort of set of investors, I think it's this category-based approach is something that will probably stand out in India. Having said that, most of the AUM should still sort of be in those simpler products, your large caps, multi caps, sort of funds, or your fixed income or your gold funds, where majority of the money tends to go.
Absolutely. All right. So that sets the context, I think, perfectly for the second leg of this conversation. Prateek, thank you so much for joining and for taking the time and for setting the platform for us.